Experts are rooting for the setting up of a bigger African commodities exchange to attract global interest and increase in cash flows to farmers. Banks are reportedly reluctant to finance warehousing receipt systems where farmers are paid on delivery when their crop is sold because of lack of laws to guide the trade. We'll be unpacking this with you right now with Dr. Adrian Mukhebi, who's the chairman of the Kenya Agricultural Commodity. He joins us now from our Nairobi studios. Dr. Mukhebi, thank you very much for coming through. A lack of commodity exchanges has raised some questions as to how we're going to grow farming economies and financing for small-scale farmers in Africa. What's your view on this one?
Thank you very much for having me. My view is that, yes, we in Africa, we need to develop market systems and institutions to improve the trading of the commodities as a way of providing the much needed incentive to the African farmer, because under the current situations where market systems are not developed, the farmer is simply not getting a fair price for her produce. And we believe that the way to provide the farmer with the incentive for a good price is to develop market systems in terms of warehouse receipt systems and commodity exchanges, which will enable the farmer to market her produce to the best possible prices in the markets.
Just talking about these warehouse receipt systems, they're used mostly in Zambia, Zimbabwe, Tanzania and Uganda, and it's seen as a precursor to a commodity exchange. Just tell us how they work and how a commodities exchange would enhance the system.
Yes, basically a warehouse receipt system is a system that enables the producer to harvest and store her produce in a way that meets market standards. So more specifically, it's basically a store or a warehouse where farmers can produce and store commodities of known standards and get warehouse receipts, which are documents that certify the existence of the commodities in the volumes and qualities that the market wants. And then using the market system of a commodity exchange, people or producers can then trade on the commodity exchange using these warehouse receipts. And this is a much improved system of trading than just trading in physical commodities.
What about mitigating risks? Because in the case of warehousing receipt systems, we're told that banks are often reluctant to enter the fray because they say that the regulatory regime is weak, even lacking, and they just see a lot of risk in putting money into this kind of facility.
Yes, in order for the warehouse receipt to work well, there needs to be a legal and regulatory framework to support it. A system that defines which sort of warehouses should be used, a system that guarantees that once the commodities are in this warehouse, they are safe in terms of the volume and quality. And so you need a legal and regulatory framework to provide that comfort to participants in the market in order to use them. And so in areas where, like in Kenya, for example, through the efforts of the National Cereals and Produce Board and other partners in the commodities industry, we just launching a warehouse receipt system where farmers will be able to store their commodities and get warehouse receipt. And at the same time, we are in the process of establishing the legal framework that is required in terms of a warehouse receipt act to be able to support this warehouse receipt system, which will then provide comfort to the participants in the industry, the trust that they need to be able to use that document as an instrument for trade.
All right. Other parallel systems, for instance, Dr. Mukhebi, is that the National Cereals and Produce Board is said to be wanting to establish a regional exchange with the East African Grain Council. Now, without really dealing with the technicalities of how this exchange would work, the question is there enough innovation in terms of deriving products that are suited for futures trading of grains?
Yes, the exchange that we are in the process of establishing will be the regional commodity exchange for the East African Community, a group of countries, Kenya, Uganda, Tanzania, Rwanda, and Burundi. And within, as you are aware, now we have a common market within the region. And within this region, we believe that there are enough volumes of commodities that can be traded on a commodity exchange. For example, maize or corn is, I think, produced in volumes that can warrant trading through the exchange. We have other commodities such as wheat, rice, grains such as beans, and a host of other commodities that will eventually come to the market. But we believe, yes, at this stage, looking at the East African Common Market as a region, as one market, we do have sufficient commodities in volumes that can be traded through a commodity exchange.
And then in terms of financial instruments that are needed, we're told that the JSE in South Africa has the most vibrant agricultural derivatives market. In terms of innovations that are needed at this level, is enough being done to come up with the right kind of pricing mechanism, financial instruments for investors to get into?
That is correct. The efforts or process to establish the warehouse, receipt, and commodity exchange for the East African Community region, these efforts involve various partners, including financial institutions. The banks, for example, are very much interested and, in fact, are partners in this to be able to provide the financing that is required for the commodity exchange. After all, one of the advantages of commodity exchange warehouse receipt is to improve liquidity in the commodity markets, and therefore the participation of financial institutions such as banks is key, and I'm glad to say that quite a number are already on board this process.